All right, so they're talking about an economic collapse, and a lot of people are, and what has happened historically.
And then I would expect to see it much higher and more participation in mainstream. I mean, it's easier to buy an ounce of silver than it is to buy an ounce of gold.
Throughout history, every major credit collapse has followed the same trajectory. The expansion of unsustainable debt, the erosion of public confidence, and the inevitable return of gold and silver as the foundation of real money. What we are witnessing today is not an isolated financial event, but a worldwide repetition of that cycle. The illusion of stability created by decades of easy credit and monetary manipulation is fading fast.
How would you like to sell your business?
Deteriorates. Nations and investors alike are rediscovering the timeless truth. True wealth is measured not in fiat, but in tangible assets that cannot be printed or defaulted upon. This psychological shift, from trusting credit to seeking value, is what transforms economic decline into full-scale monetary realignment. Rafi Farber and Lynette Zhang, two of the most respected voices in the precious metals community, have been warning for years that this reckoning was inevitable. According to them, gold's current surge is not speculation, but a natural response to decades of reckless monetary expansion. They emphasize that silver, often dismissed as secondary, is poised to become the centerpiece of the next financial reset. With its unmatched accessibility, barter potential, and historical 15-to-1 ratio to gold, silver is not just a hedge. It's a lifeline in a system where confidence in fiat has collapsed. Farber describes this as the reawakening of sound money, while Zhang calls it the moment history stops pretending that debt is wealth. This unfolding transformation marks the dawn of a new monetary era, one defined not by central banks, but by the return of real value. Gold will reestablish itself as the enduring store of wealth, while silver, driven by both industrial necessity and monetary demand, could evolve into the currency of everyday exchange in a fractured global economy. As the world transitions away from paper illusions toward tangible reality, the real question is no longer how much money you hold, but how much real wealth you've secured before the system resets for good. Now, let's watch the clips from the interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
We have a long way to go in terms of consciousness. This is, sort of like a monster, maybe roaring in the background and you turning around and saying, what was that? And maybe you were a little bit scared and you think that like you don't believe in Bigfoot, but maybe there is a Bigfoot and you don't know for sure, and you're not going to discount all of the theories anymore. But in terms of time, I don't know if we have a lot of time. We have a lot of consciousness changing, but consciousness can change very quickly. That's what hyperinflation is. It's one day credit is money, or credit works, and the next day it does not. And the main point that I want to hammer here is that when gold does things like this, there is the general confusion among the mainstream media. They're like, oh, gold, we don't know why it's going up, but it's generally a safe haven asset and an inflation hedge, and that's why it has historically done that, and so people are going back to it because they always have, and we don't have any other answers other than this is tradition. That's not why. The answer is that gold is money right now. It always has been money, and all the other stuff is credit, and credit is based on money. The purchasing power of credit is based on money. You cannot have credit without it first being based on money, and all the other credits are credits based on the main credit, which is the US dollar, which is based on money. Everything connects. And that's why it's described as an inflation hedge, because it's just money that isn't inflated. And I would challenge the viewers of this show, and your viewers generally, and my viewers and Lynette's viewers, to play this little experiment in their head. Instead, in any sense that you could use the word dollar, or sorry, that you could use the word money, instead of saying the word money in any sentence that you say or any sentence that you hear said on the media or from your friends, instead of the word money, just instead of the word dollar, sorry, instead of the word money, just use the word gold or silver. Just use that. And then you'll see how everything fits into place. You'll see how the gold and silver are the money. They're not an inflation hedge. They're just money that's not inflated. And as credit loses value, it loses value into money itself. That's what's happening here. The mainstream media doesn't get it. The people don't get it yet, but they think that maybe Bigfoot is real. Maybe the stackers are not totally insane. Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time is it's global, and this time it's everything, and this time there are no escapees.
I always say that I think everybody should do what the smartest guys in the room on any given topic are doing for themselves. And so since 2008, we have seen the global central banks pile into gold, and the last several years at the highest level ever. Now,
So this is gold, and this is the banks piling into it. This is interesting.
room on any given topic are doing for themselves. And so since 2000,
So this chart here, since 2022, 3 and 4, and this year's not over, look at what they've done with established purchases. Wow, in gold. Source, World Gold Council, Metals Focus, Bloomberg. It's a source. It's pretty solid.
2008, we have seen the global central banks pile into gold, and the last several years at the highest level ever. Now, when you look at a relative performance chart over, say, the last year, last 200 days, you see, I believe that we are in general in the melt up phase of this trend cycle. But what you also see is that gold and silver, silver's outperforming everything at the moment. But while everything is rising, you're seeing a rise in the spot silver and the spot gold markets at a significantly higher level relative to the performance of anything else. So what I think that's moving those markets is the smart money. And I think that that really started at the beginning of this year when we had this huge influx of the physical gold and physical silver into the U.S. So I think that this is nothing new. I think it's just becoming more visible, and that it will now trickle down to more of the masses.
Have you heard about the hidden bull market?
Driving silver, and maybe comparatively silver to gold for this loss of confidence in the dollar and dollar-based debt, etc., and a move into precious metals. How much of that do you think could move into silver versus gold? And Lynette, I'll start with you on this one.
Well, that's a really good question, because when I go back and look at the charts and going all the way back to the beginning of the silver markets, what I see is coming to conclusion on a double cup formation, which, to be honest with you, I don't think I've ever seen anything like this before. So a close above 50, just from a technical perspective, would mean a much higher spot silver price. It still doesn't come close, again, to the fundamental value, but success does beget success. And the higher that goes up, and remember, we've had a lot of silver stackers that have been touting the silver gold ratio for a very long time. To me, that's not a trade. That isn't why I would ever buy silver, because for me, it's about functionality. But I do believe that we are going to be closing above 50. And then just from a purely technical perspective, what that means is that all those sell contracts up at 50 have been used up. And then I would expect to see it much higher and more participation in mainstream. I mean,
I'm going to let it go there. So we're going to see it blow past 50 in a short time. Let's look at the markets currently and see where they're at. You can see here where gold, silver has went down and fallen from 52, above 52.50. It was coming up yesterday, and it made it to 52.50, but it has fallen again, and now we're now around 49.27. But this fall that we've had from 54 is you're getting a lot of resistance, but we have runs on silver, and we've had places out of silver, and India's buying a lot of silver, China's buying a lot of silver, and I think people in the United States are also buying, and so is the UK. So I think people are concerned about governments and markets. I think they're concerned about the policies that are going on, trade wars and other things, and they're going to be looking at really what the markets are and are not doing. And so, again, I think we're going to get past 50 this week and probably stay there. If it's not this week, it'll be next week. You'll have some volatility going up and down, of course, like you normally do. But I think we're going to see this stay above 50 by the time we get through November for sure. Now, I'm just guessing because I'm no expert, but we've seen the price go up in the last couple months from 30 to 50 and put $20 on it per ounce on silver. I think we're going to see that happen before the year's up, and we're going to get another $20 on silver, I would easily estimate, by the end of December. But we'll see. We'll see. I'm no forecaster, professional forecaster, but there are professional people that are saying that silver will go up somewhere around $200, if not beyond. And they're saying this is inevitable because of the markets that are going on. So is that going to happen? Would I bet my life on it? No. Because the silver and gold markets are manipulated by the big boys and always have been. And that's the same with the stock markets, and that's the same with the commodities. The big boys move those markets, and the little people just have to live with what the markets do and the big boys do. So we'll see if we ever get around $200 an ounce with silver. But gold has made some pretty good moves. I think silver's going to make some pretty good moves because of demand, both industrial-wise and the demand for collection. I think you're going to see some silver mines probably open up again. And where it goes next year and this year is yet to be seen, but I would not underestimate silver by any means. I think we're going to see silver stay well above 50, and I think 70 is not unreasonable, even 100 by the end of next year. $100 an ounce. We'll see. But it would not surprise me by the end of next year for this to be doubled and to be above 100 by the end of next year. Again, we will see. This is what's moving a lot of things. People are concerned about what the real market is going to do when the fiat market crashes.
More silver was sold on paper than exists above ground for sale anywhere on the planet. That's not a market, that's a con. Now at $50 per ounce, the total annual silver production on Earth is worth just over $40 billion. Think about that. Apple could buy every ounce of silver mined in the world this year with its cash reserves and still have money left over. That's how tiny this market is. And yet it underpins the entire electronics, solar, and green energy industry. So what happens when the physical market finally takes control? When someone says, I don't want a contract, I want delivery, that's when the music stops.
Now think about that. I forget how many paper contracts were sold by different banks and investors, and they really don't have the physical supply to deliver on those paper contracts. So what happens when they're called and they said, I don't want the contract, I want delivery of the physical item, and they can't deliver it? That's when things are going to stop. And I think we're going to get some physical calls, and we'll see what happens. Could be very wild.
The vaults are already being drained. There are reports out of India that refiners can't even get raw silver anymore. Premiums in Shanghai have blown out to record highs, as much as $8 above the so-called spot price. That's the real market telling the paper market it's lying.
I was going to say we can start with silver because that's where the financial system very well could end, is with silver. There's obviously huge tightness all over the world in silver. India has doubled the amount of ounces. Forget about dollars or rupees. They've doubled the amount of ounces they're importing. The bullion dealers in China down, and they're not selling silver. The one bullion dealer that is selling silver is selling it at $128 an ounce. Silver's going into backward.
One that in China that's selling it is selling it at $128 an ounce. Wow. Wow.
Where the futures or where cash is higher than the futures. The lease rates have exploded. It's primed and set up for failure to deliver. And I can't stress enough how important it is for silver not to fail to deliver, because if it does, it'll immediately spill over to gold. And you get action in gold like we're seeing in silver, that's the end of the system. And I say the end of the system because confidence will entirely break. And the fractional reserve / fiat system runs 100% on confidence. And if you break confidence, it goes back to what my late partner Jim Sinclair used to say, what is the value of a contract that cannot perform? And the answer is zero. And he posited that you could see gold futures at $10 offered, no bids, and $50,000 bid and no offer, meaning people will not accept contracts because they know they're not going to perform. They want the real deal in their hand, than they did 40, 50 years ago. And we should talk a little bit about the two spikes in silver that we had previously to $50. 1980 with the Hunt Brothers, and then 2011. The Hunt Brothers, that was if you want to say that was vapor at the end. I mean, there was a huge spike. It was basically an intraday spike, or within a week's period of time. They did not stay at $50 for any real length of time. And then again, the same thing happened in 2011. We had the spike up. It didn't go through 50. It fell back, and then they smashed it. And of course, they smashed it in 1988 also. This time, I know it's not good to say this time it's different, but it is different. It's already different. You can see it. We've been over $50 now for, a week? Maybe a week and a half. But the thing is, we've gone through 50, and the buying, if anything, has increased. And the risk here is that the chart goes parabolic. And the blood in the water that the sharks smell is that there's not enough supply, and that that they can break these markets. So when I say break the markets, you've got too many longs demanding delivery, and there's not enough supply. And we're going to find out that both gold and silver have been fractional reserve markets where they counted on only 1 or 2 or 3% of the longs standing for delivery. It's been a process. This has been taking place for 2 or 3 years now. If you look at both gold and silver on COMEX, the first notice day, and I'll just use a number of 100. Let's say there was 100 contracts standing for delivery. Prior to a couple of years ago, 3 years ago, what would happen is you have 100 contracts going into first notice day. And by the end of the month, it might be only half or 25%. In other words, the longs liquidated, took cash settlement, and walked away. But what's happening now is you get first notice day with that same 100 contracts, and by the end of the month, you might have 150, 200, 250 contracts standing for delivery. So no longer can you count on first notice day being a big number, and that's going to shrink from there.
Let's pick up where we left off, because what's unfolding right now in the silver and gold markets isn't just about price. It's about the breaking point of a system that's been stretched past its limits. You can only play accounting games for so long before reality forces a reset. We're standing on that edge right now. When you look at the silver market today, it's a perfect microcosm of how the global financial system operates. Leverage piled on top of leverage, paper promises traded back and forth, while the actual underlying asset becomes almost irrelevant. We're watching a system that sells what it doesn't have, promises what it can't deliver, and counts on no one ever calling its bluff. But the world is calling that bluff. India, China, and even industrial consumers in the West are demanding delivery of real metal, and the cracks are showing. Remember, every ounce of real silver represents a claim that can't be printed. That's why they've had to suppress it so aggressively, because if silver ever broke free, it would expose the weakness of the entire monetary system. See, silver isn't just another commodity. It's the canary in the monetary coal mine. When silver spikes, it's not just signaling demand for metal, it's signaling a collapse in confidence. Because if people suddenly want to trade their paper claims for physical metal, it means they no longer trust the system. And that's what's starting to happen. Just look at what we're seeing with lease rates. The cost to borrow silver in London has gone through the roof, hitting levels we haven't seen in modern history. That's a sign of extreme tightness in the physical market. You don't get 30% plus lease rates unless the shelves are empty. In any other market, that kind of shortage would be front page news. But in the precious metals world, they act like it's business as usual. Now, when I say this is systemic, I mean it. The derivatives complex that underpins the entire financial system is a web of interconnected liabilities, more than $2 quadrillion worth, according to the BIS. That's not an exaggeration. It's all interlinked. Foreign exchange swaps, interest rate swaps, credit default swaps, and the common thread through all of it is counterparty risk. If one major player can't make good on its obligations, that failure ripples outward like a shockwave.
Well, so we'll see what happens, but could have some very volatile movements in the market and some very concerned rich people that are selling their contracts want physical delivery because they're not sure the contracts are valid because they don't have supply. That would be a scary deal, and that could ripple through the markets big time, and that could shoot up the demand and the value of silver and gold big time. We'll see what happens.